So today we'll be talking about liquidity. Okay, it can be written as LIQ or just LQ, whatsoever that suits you. Now, what is liquidity? Liquidity is money. Okay, liquidity is money. What is money? Money is, you know what is money? I don't even need to explain. That money you deposit is the liquidity. Now, I saw a tweet. Somebody asked that those that lose, where does that money go to? Now, it's just like a round scheme. Your own loss is another person's profit. Okay? And also the brokers also get their percentage, their commissions from your losses. Now, liquidity is what moves the market. Liquidity is what moves the market. If there is no liquidity, the market cannot function. All right. So liquidity is basically money. In the shortest form, I will write liquidity as money. No need to say too much. If there is no liquidity, the market will not move. If there is no liquidity, the market will not move. So liquidity is very important. That's why they say if you cannot spot the liquidity, it means that you are the liquidity, which means that hope you all are following. Alright, fine. Which means that if you cannot, oh my god, if you cannot spot where the money is, then you are the money. Now, we have major types of liquidity. In the past, your previous mentors must have told you trendline liquidity, this one, that one, blah 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 blah. They are not wrong, but I don't compel myself with so much knowledge. I simplify everything. Everybody that have learned from me, I simplify everything so that you can remember it. I can't remember the last time I opened a notebook to teach. That's because I simplified everything to my own understanding, and that's how I give it out. Alright, so let's talk about the three major types of liquidity. So if you have been taught higher highs, please try on the general group. If you cannot see my screen, just say it there. Somebody say they cannot see my screen. I don't know. Let's continue. You can see. People are not seeing the screen. You see everybody. But if you can see, just say you can see so I'll know. What is just going to happen is that I'll try to register TLS as a company. Then, yeah, I've started recording again, share my screen again. Then I will just subscribe to premium Google. This I said Google, I think it's Zoom, so that they can allow us use because they'll have to ask for your organization and everything, so I don't have those information. But don't worry, the video will not have any lag at all, as usual. So for those that are following, let's continue. So now we have the three major types of liquidity. Before we talk about the major type of liquidity, now liquidity plays vital role in the market. It slows down price movements and it provides fuel for institutional moves during breakout structures. Okay, and it reduces volatility permanently. Now, what do I mean? Now, the market, I said before I talk about the three major types, I just want to explain this. Now, the market can be moving like this. If it keeps moving up, what fuels that market? It needs to reduce some people. Okay, it needs to kick out some persons, some wrong people that do not enter at a correct entry level. It needs to take them out to move properly. Okay, now that's why I say liquidity is very, very important. Majorly, if you do not understand liquidity, it's almost impossible to know a proper break structure. Okay, because the liquidity you were taught, which is still right, but I do not use it. You were taught previous daily high, trendline liquidity, support and resistance liquidity, previous monthly high, previous monthly low, weekly high, weekly low, and all of that. I do not use those informations. Will just break me. I don't need them. So the three major types of liquidity that I work with here, number one is called structural liquidity, which can be written as SLQ. Number two, inducement liquidity, which can be written as IDM or ILQ. The last one, number three, transactional liquidity. Mind you, all of these have liquidity at the end. Get it. Which can be written as TLQ. Now we're talking about the one that is a bit complex and a bit difficult to understand. We'll start with that first before we talk about these other two, because these other two are simple to understand. Now, what is a structural liquidity? Now, everybody was asking, how do we know a break or structure when it occurs? Now, there are qualities to know a proper break or structure, and having a structural liquidity in a break or structure is the number one rule of a break or structure. Now, how do I mean? Now, this structural liquidity makes a break or structure valid. Any break or structure that does not have a structural liquidity in it is classified as a structural liquidity itself, which means that a structural liquidity does not have a structural liquidity, but a proper break or structure, a valid break or structure, has a structural liquidity. So it is a structural liquidity that makes a break or structure valid. How do I mean? Now we have this break here. Now if you remember why I was explaining before, I talked about that liquidity helps us to have let me just put it like an interruption in the movement of the market. It slows down price movement. Let me put it that way. It slows down price movement. Okay, now just the way this chart is here, if let me take this up, the way this price is now, if price is coming to this point and he wants to buy, for example, and then there is nothing that slows the movement here, with the volatility and speed, it will turn this whole leg to be a liquidity. But if, for example, there is an interruption, something like this here, before this break or structure, it has to be before. A structural liquidity has to happen before the break or structure with the body of the candle. Now we are using this as structural liquidity as an interruption. Now if this occurs, if price is coming, it slows down at this point, because I told you that liquidity is money. So price moves to grab liquidity. Now it will grab liquidity from here, and it uses the nearest zone to continue the movement, and that's how the continuation continues. So if this thing was not here, it's just like a speed bump. Okay, just like a speed bump. Now there's a car coming with speed, and he approaches this speed bump, and he slows down. If there was a child here, definitely we not kick that child. But if it's just straight up, with the speed, we throw that child away. Now you are the child, your money is the child. So you need structural liquidity before you break a structure, or else you will become the structural liquidity. If there is no structural liquidity, this whole leg here becomes the structural liquidity. Now let's proceed once again. Let me take this out. Let me show you how. Now we have two ways a structural liquidity can occur. Why in TLS 1.0 I found a way personally to make structural liquidity more understandable to them, because the first glance it was really hard for them to spot it. Now I created a name for it, and I called one dual structural liquidity. This is how we form languages for the student understanding. So if you hear dual SLQ or series SLQ, just know that it's a student of TLS. The person learned from me. Now this is not for everyone. Let me just put it this way. It's not an understanding for every person. Like if you go out there and said, the dual SLQ, there is nothing like dual SLQ or series SLQ. It is based on how I wanted them to understand, because they were having difficulties in understanding. But right now they know it very well, because it's been like almost 7 months or 8 months with them. So this is not that problem anymore. So but I'll still be using the method for you guys, so that you can still remember. So every year dual series, just know that we're talking about structural liquidity. Now I'll be explaining the dual first before the series. Now the dual structural liquidity is the one that comprises of 3 candles. A first candle, then the second candle that closes below the first candle, and the third candle that breaks above either this candle or this candle. But it can break in either of it, either here or here. But the most important thing in structural liquidity is that it must break below the previous candle in dual SLQ. Then for series SLQ, it is made up of more candles. Let's just put it like 4 or more candles. 1, the one that closes below. 2, more candles moving. This one, it doesn't have to be like it breaks above this immediately. No, this one, too many candles moving in sequence. This was just like a break of structure on its own, and then it breaks structure. So it's like a proper break of structure. But this thing that happened is found inside a break of structure. It happened inside a break of structure. Now this here is a structural liquidity. So either it happened 3 candles or 5, 4 or more candles. So this will be called the dual, and this will be called the series. Let's go into the chart to check out the structural liquidity. We'll be using gold. Now we'll be using gold. Also we'll be defining it by to get a valid internal. Now where is that chart I used to explain the last time in the class, and I told you that with time you will understand what I said. This guy is not a valid break of structure. Fine, now let's get it straight. Now this guy here broke structure. Fine. Does he have either series or dual structural liquidity? Let me put it on 30 minutes. You see structural liquidity more clearly on 30 minutes than 1 hour. Let me check those the. Can you increase the size of your mouse? This is like the biggest now. Increase it to what again, please? Let's go back to gold. So we're using 30 minutes time frame. The person that said I should increase my mouse, I don't know what to increase it to again. No. Now, this 30 minutes time frame, this is where a break or structure occurred with no structural liquidity before the break. So this guy right here is not a valid internal. This guy right here is not a valid internal. Then while I was explaining, I said this guy is valid. Why is this guy valid? Number one, this guy has a structural liquidity. This over here is the series structural liquidity, where price breaks structure inside without giving a structural liquidity. Like I said, then it becomes the structural liquidity. If you look very well, this is the movement here to here. So there is no structural liquidity here. So this guy here is a series structural liquidity. This guy as well is a series structural liquidity, which makes what this guy over here a very valid, for that matter, internal. Then secondly, this other guy here is a valid structural internal, a valid break or structure. Why? Because this over here is a dual structural liquidity. I told you it's made up of 3 candles. Number 1 candle closed below the previous candle, and the next one closes above it. So we have these people here. We also have these people here too. These ones did wonders. Their wick is very long. It even swept this one. Now, the concept of price closing below the previous candle is called sweep. Okay, it's called sweep. That's why I said this one swept this. So the concept of price closing below this candle is called sweep. When you have price swept the previous candle to create a structural liquidity in the internal, this is what I mean. Now, if this guy was not a valid internal, then this guy over here, if this guy was valid, this guy would be just a structural liquidity, a liquidity to this zone. This guy is not to be traded. Now, we do not trade structural liquidity, please. It is just there to give us that speed bump I said before. So pay very much attention. Now, this over here is a valid break or structure up to this point. This guy, this is dual structural liquidity, closed below the previous candle and the next candle closed above it. This one here is the series. It broke structure and so on. Let's get more examples, because this over here, this is the dual, closed below previous candle, next candle closed above it. I'm going to drop what's the name, a template of how it looks, so that you can also be looking at the template while you are looking for it on the chart, instead of just rewatching the video once you understand it. Then this one here is the series. So the difference between the series and the dual is how many candles are we using. The other one has to be just close below the previous candle, and the next one should close above. Fine, but it should happen before the break. You see, all of them, this one did not happen. No one at all happened here. That is why this guy on its own is a structural liquidity. This guy is a structural liquidity. And then this other one is just like too many candles, just like this and this. So you have to see it inside the break or structure for it to be called a valid internal. That's what validates an internal, a break or structure. That is what validates it. You can see so many structural liquidity inside one break or structure. That's fine, there is no problem. But there is something I wanted to explain, but I will not explain it right now. I want somebody to ask it as a question, because you're going to observe it. I want somebody to ask it as a question. That is where the failed external will come from. I want somebody to ask it as a question. Let me just say it. I'm half of it. What I mean is, we have not got into the validation of external. Okay, I've talked about the validation of external, which I talk about that price must create 3 internals. I don't know if I've said it before. Price must create 3. Price must create 3 internals to validate an external, and price must create 3 external to validate a range low. These are important notes that you need to write down. Price must create, if you want to say this place is a valid external, if you go to the 4-hour time frame and you draw your break or structure in the 4 hours time frame, if you go to the lower time frame and price did not create 3 valid or more internals inside this 4 hours break or structure, it is not called a valid external. A valid external must have 3 valid internals, and those internals must have structural liquidity. 1, 2, not valid. 3 before the break. So the rules is, for internals, price must create structural liquidity 1 or more. That one, there is no, it must be 2 or 3. Then for external, price must create 3 valid internals. What validates that internal is their own structural liquidity. Then for a valid range, price must create 3 valid externals that have their own valid internals. So that's just as simple as that. So that's just on structural liquidity. I expect you not to understand fully, so ask question. That is why you are here. Now let me show more examples of the structural liquidity. Like this now is what makes this valid break or structure, because of this structural liquidity. We had the DOA here and we had the series here that broke this structure. As simple as that. So let's go into the next one, because we have 2 more to treat. Now the second one we have there is the inducement liquidity. That one is quite easy, very very easy. I don't even need to say too much. Now what is an inducement liquidity? An inducement liquidity is the first most recent valid break or structure. When I say valid, it means that it must have structural liquidity. For example, we talked about disruption, and I told you that disruption is what changes the trend internally of a particular pair. Just like gold, you might be wondering, why do people sell? Why did I take those sales I was taking from here? Why are people selling? It was because this disruption was taken out. This is a disruption, you all know. Now this is called an inducement. Now inducement is what they call trap for early buyers and early sellers. Why is that inducement there? Now imagine somebody, before I continue, in CLS we hardly buy directly, not just like we hardly, I personally, because most of them on synthetic they do trade directly, but we don't trade directly as a point of interest, because over time I have back tested and price rarely produces a valid zone. Like that time when they were talking about other blocks and the rest, other blocks where demands are kept. Okay, price hardly, I will still drop something on that. Now price hardly keeps this zone where price just taps on it and buys immediately. It has to do with you have to see some things. When I get to entry, I'll talk about that. You have to see some things to convince you that this place is worth buying directly from. And not just that, you don't even still buy directly from that point. Price has to create some more things for you to join the continuation. Okay, now aside that, the first most recent break of structure before the disruption is a no. You have no business buying directly from that point, because it is liquidity. And what I said before, I said liquidity is money. Money has to be taken away. Takes from Peter to pay Paul. Money has to be taken away. So if this point is called liquidity, you should know that this guy right here is just for to slow down price movement before coming down to the disruption, to either buy from the disruption or take it out and continue from that point. Now what do I mean? Now this inducement, it is here as a trap. Inducements are not tradable. They are not to be tradable. Okay, when you have the valid break of structure, the most recent valid break of structure, you do not trade their inducement. What you trade from is the continuation of the disruption. You do not trade directly from an inducement, because it is called liquidity. Inducement liquidity. And wherever liquidity is where money is coming to be taken away. Price is coming to take away that money for price to keep moving. It's on rare occasions you see price get to inducement and start buying, except it's like a reclamation, which is over 30% win rate. So the first most recent break of structure before your disruption is called an inducement. After this inducement got taken out and this disruption got taken out, that is why people started selling with continuation model. A from here, B from here. You can see so many sales that occur. Continuation model. C, I took all of them from here. D, the last one, I took all of them, and this was where I closed at 333 something. But you understand the entry models when we get to entry. So you don't have to trade at inducement. Now, some people were trying to buy gold, and I was wondering why would they be doing such a thing? Price taking out inducement does not mean that it has changed character to sell. The way price took out this inducement here, if he did not take out this disruption, that gold I took, I wouldn't have taken it. I can't take such risk. Now today I saw some people trying to buy gold, and I was laughing, because ignorance is actually a disease. Price created. Now let us look for the this is a valid internal here, which is the most recent and is our inducement. Now let's look for it. So we had this valid high here. This is structural liquidity. This is structural liquidity. This is the highest point. This over here. So it means that what this is our high, and this is our break. Let me zoom in this very well so I'll know which of the candles are the highest. Okay, I think it's this one, but permit me to keep it here in the middle. But this is where it's focusing on, and this is the lowest low there. No, I think this. Okay, well, let me just put it in the middle. Now, why is this our structural liquidity, our inducement? Is because what price created structural liquidity inside of it before it broke this structure. Look at where it broke structure. Now, people that were trying to buy gold, I was laughing because what price took out was just an inducement and not the disruption. So why are you buying? They were trying to buy gold at this key level. Fine, they got their profit, but it was a short term. I really do not trade like that. I don't counter trade. It doesn't favor me, so I don't try to do it. It doesn't work for me. Over time, I have tried my best. When when the structure is bearish, if I try to buy, it doesn't work for me. Fine, this went along, but now ask yourself, what about people that may likely want to like take more buy position at this point? They might lose out. So what price took out was just the inducement. Okay, this guy here, okay, I think this is the disruption, a valid in the next valid internal. Let's check it out. So we had this low, the most recent here. This is a dual structural liquidity. Fine. Now this is, we'll just put all together because all these things here are just structural liquidity. So we're adding them to the most recent where this last candle stop. That's what we're putting it. So if price are taking this guy out, fine, you can start buying after like price create at least one more internal. You can start buying. But what's the essence of selling? Meanwhile, price just took out an inducement and not even the disruption. Look at where price sold from. From this mitigation block. It's an entry model. I will teach you. That's where price sold from. And you can see when you are trading in line with the structure, very important thing happens. Price obeys your analysis at ease. People will think that you are faking result because when you hardly hit SL if you're trading in line with the structure. Highest thing may be you're not trading so much. In a week you might trade 2 or 3 times or none. But you have like a no percent drawdown. That's just the truth. Okay, now another continuation model came on after price tapped here. We had the first continuation model here. I may likely not take this one because I don't trade key levels that look like this. I like the proper one. I also explain key levels that look like dual and series as well. The proper one is like this particular one that price later reacted from. This one, very simple and clean. Now you are trading in line with the structure. You are selling because price is still bearish. If I see anybody from TLS 1.0 that would just tell me that they got an SL trying to buy gold, and you ask me what did I do wrong, I will not answer you. That's just the truth. Because at this point, except you are somebody that you like to counter, then fine. When you counter trading, you should know that your risk is 50-50. You have no business asking your teacher what you did wrong. Okay, now if it's like you're trying to sell and hit a sell, then we can put heads together if you are in line with the structure. Now some people are selling at this point. I think is it this? Yeah, this key point here. But I am not taking that sell. Why? Because I want price to break this low to make this a valid break of structure. It should break with the body of the candle. I told you guys the reason why I was taking all of these sells here was because they broke with the body of the candle at the disruption. So it makes this a strong point for we to sell. Imagine price breaks here now. If we are selling from this point, it is a strong point. Now, Steven must have told you before that we have strong points. A weak point is created after what price breaks through. Now look at this is a weak high. Why is this a weak high? This is a weak high because price broke through. Now price breaking through a weak high makes the low a strong low, which is this. If price breaks this, it makes these people here to be strong. It means that what they prevailed. I won't want to talk too much. Inducement is simply the most recent, because if I explain that, it will make me to be going to entries. So I don't want to like say too many unnecessary things, okay? But in essence, what am I saying? Inducement is the most recent break of structure. Just like if price can break this point now, then the most recent break of structure internally it creates should be this guy. If it breaks, it should be this guy, because this guy has the dual structural liquidity in it. But this whole guy will be one leg. You will know why this whole guy is one leg when we get to entry. This guy will still stand as it is, but this guy over here, where is that guy? Over here, will be a valid internal. There's difference between a valid internal and an inducement. This guy as a whole will be a valid inducement, but this guy here will be a tradable internal. With time you will understand. Now the last one we have, because our time is fast gone, the last one we have is the transactional liquidity. You say price did not close below what? Who was that person? Price didn't create 3 internal BOS. I've not even explained external yet. Now when I get to external, I will show you where price breaks structure 3 times. This one I've been talking about is internal. So what do we need 3 internal break of structure for? What we need 3 internal break of structure is for external. What we need in internal is structural liquidity. Don't confuse yourself. Make sure you are writing. Now let's talk about transactional liquidity. Now if you remember what I said, let me come back to the let me draw an internal first. Now this guy over here will be an external. 1 2 3. This is an external. It has 3 valid internals. Then this guy here will be a valid internal. It has 2 structural liquidity before the break of structure. Okay, so now if price gets to the internal, sorry, let's use the external first. Now the process of the transactional liquidity is simply previous weak point. Now you guys know what we call the change of character. People were making mistake. Change of character only occurs in the higher time frame. Okay, only occurs in the higher time frame. Now if this is a change of character, this leg here is let me move this first. If this leg here is our external, why is it a valid external? Because it has 3 valid internals inside of it. And now you know that once price takes out this first guy, our inducement, and eventually takes out this second guy, our disruption, the next point that price is going to, price does not have any business. If price buys a bit and returns back, it doesn't have any business with this guy to buy from here. This guy becomes internal liquidity. The moment price takes out inducement and disruption, every other structural liquidity, every other internal, as a matter of fact, every other structural liquidity too, whatsoever that was created later on before the external low becomes internal liquidity. Now price will clear out every internal liquidity till it gets to the external. I will explain this again when in the next class. Okay, now if price gets to the external, it is price to decide if to buy from the external or to leave and keep selling. Now if price breaks this external, it is now called what? Change of character. And if this is a change of character, what does it simply mean? It means that price wants to sell for a while. So every other break of structure that occurs, other valid externals, once a change of character occurs, previous valid externals becomes transactional liquidity. Transactional liquidity is after change of character occurs, the other valid externals, they turn to transactional liquidity. We'll go into the chart for this in the next class. So this is like a previous external created. This guy will now be called TLQ. and it is not tradable. I see some people on Twitter trying to buy at transactional liquidity. It doesn't work that way. Once a change of character occurs, though you are not trading the higher time frame, you have no business with trading from 4 hours, except you are a swing trader. But after a change of character occurs, what you will still follow up to sell from, to clear all this transactional liquidity, is still your internals, because inside these externals are internals that are tradable. You cannot be waiting for price to get. Imagine using let's say this is external. Imagine using this external as your inducement and using this external as your disruption. You will wait because you may likely not want to trade from the inducement, so you have to wait for price to get here. That one is it today. So inside this, the retracement will happen at this level. Price clearing out, gets to the disruption, keep selling, so on, keep selling, trying to clear this guy. Then now we can get like a disruption occur, and then price try to buy for a while, and then returns back again to clear another transactional liquidity. At that point, it may likely like create 3 or more internals, and then it gives us a new external, and that is how these higher highs and higher lows are being formed. Everything works in circle. Okay, all of these work in circle. Now it is very simple. Transactional liquidities are just there to be taken away. We have no business with them. They are there to be swept away. After change of character occurs, previous valid, whether valid or invalid, previous externals, everything following up will be taken away, and then price will just keep selling. When we get to entries, not that we want to buy from TLQ. It's not advisable. So we have to stop here for today. In the next class, we'll be going into the chart specially for transactional liquidity, and the next topic I think is discount and premium. That's not so much, is important, but not so much in the strategy. We don't even need it that much, but it's just there. Okay, so we'll be stopping here, and I'll be sending the video in the next 1 hour. Thank you, and the video will have no lag. Thank you so much for attending to this class.